Mortgage rates are increasing, and here is everything you need to know about it and what you need to do immediately. So unless you've been living under a rock, you would have seen in the news and all the media that the conflict over in the Middle East has had a knock-on effect to mortgage rates over here in the UK. Now, we have seen a spike in interest rates, nowhere near the severity as to what it was in 2023 and 2024, which were in the 6s and 7% regions, but few weeks ago, we were looking at rates in the high threes, anywhere between 3.8, 3.9, loan to value, obviously taken into consideration. Now we're seeing that those same rates that were at 3.8 are now up to about 4.1, 4.2. Again, this is all lender reliant. So if you still have a fairly good amount of equity in your property, you can still capitalize on a cheaper rate below 4%. But if you're in a position where you're looking to remortgage at any point in the next 6 months, so you're anticipating that your rate is due to expire in September, October this year, or any time before that, you need to be securing a rate as soon as you possibly can to ensure that you have the cheapest option. So if you haven't already heard from your mortgage broker, you need to be reaching out to them and saying, can I secure a rate immediately? They should be anticipating when your expiration date is for your rate. They should be able to tell you exactly when your first opportunity is to be able to secure a rate. And from that point onwards, if the rates were to shoot up, you will not be affected. But if the rates were to come back down at any point throughout the course of the next 4, 5, 6 months, you can change the rate to the much lower one, which is what we've been doing with customers for the last couple of years. If you are in a position where you can remortgage to another bank, even if you can just about scrape it by, you need to be getting that precautionary application in place right now. If you have that mortgage offer, that's going to be in place for 6 months. That will cover you throughout the duration of what's going on with this conflict situation and give you a good grasp of what is happening in the mortgage market. But if it is to shoot up at any point, even further over the next few months, you have a safe option over here. So if you are then coming to the point of doing a product switch with your current bank and the rates at that moment are a lot higher than what you secured in today's market, you're completely safe and you're covered and you simply move to the new bank. If, however, you're not in a position where you can remortgage to another bank and you can only do a product switch, you need to ensure that you understand the first date in which that is done so that you can lock in the rate and you will always be able to change it for the cheaper option should there be one further down the line.